Welcome to a fantastic edition of Rebellion's educational series. I'm here with Kevin Mahn, veteran investor, CEO of Hennion Walsh, former Lehman Brothers guy. I've known him since he was at Lehman for quite a while, and I've been enjoying learning from him on LinkedIn. And Kevin, thank you for joining us today.
It's my pleasure, Alex. Thanks for having me.
So, first question is ESG investing continuing to grow? Is it kind of slowing down?
Yep. In fact, in the last 4 years, the total amount of assets invested in ESG-oriented strategies has grown by more than 4 times, tripling in the last 8 years. And as it stands right now, across the globe, 1 out of every 3 assets is currently associated with some form of a sustainable investing strategy. Although, Alex, the majority of those assets right now are being managed institutionally. Roughly 70% of those assets are institutional, 22% is retail, and the difference is some hybrid between institutional and retail investors. But the trend is certainly growing because, as it stands right now, it's no longer the old form of socially responsible investing strategies that often underperformed and merely look to pick stocks or companies based upon what they did, or rather what they didn't do, pulling out some of the traditional vice stocks, such as cigarette stocks, alcohol stocks. Today, with ESG investing, which focuses on environmental, social, and governance screens, we look to pick companies on a more holistic basis that not only perform well, but also feel good for those investors that are investing in them. So a very landmark type of movement that's taken place across the industry now to consider ESG factors without neglecting the investment merits of the companies too.
But if asset dollars are in 1 and 3, that's 33% market saturation.
Yep.
And figure it can only get maybe at up to 80, 90% just because you've got a certain amount of the field that just can't be included for whatever, coal, mining, tobacco, as you mentioned. Could you see maybe a pullback from that where, in fact, money flows to non-ESG stocks for a while if there is a movement in the opposite direction?
Yeah, I think conversely, where this is going to go over time is that investment strategists and portfolio managers like ourselves are no longer going to be talking about ESG investing or sustainable and impact investing, but rather it'll become part of our selection criteria for how we evaluate companies and how we ultimately select the stocks within our portfolios. Because these companies that treat their employees right, that give back to their communities, that are good stewards of the environment, and also deliver sustainable, consistent returns to their shareholders, well, guess what, Alex? They hold up better during periods of volatility, and they also provide upside growth potential. That's what investors want. Whether you call it ESG investing, socially responsible investing, large cap investing, ultimately that's what investors are looking for. This is just a different means by which to identify those growth opportunities.
No, definitely very well said. I look for karma. It's very important for everyone to search for karma, and companies that have good karma tend to have better stock performance. Companies whose employees are happy with what they do, believe in what they do. People are smarter than what you give them credit for. And if you watch that Fire Festival documentary,
I did.
All of the employees, they had an inkling that something was amiss before it really started being amiss. So I mean, the ecosystem of a company is very important. If you have happy, obviously, in the end of the day, when it comes to investing, it's like being a grocery store clerk. You could drop any, peanut butter at a crash and the other 99 work out and you still have a good portfolio. So, right. Bad things do happen. But when you associate with, positive associations, you tend to do better on average, which is really what our business is all about, beating the average.
Correct.
So, yeah. So, you were at Lehman. I've got to ask,
yes.
Do you think that Dick Fold should have been able to keep Lehman from going bankrupt, or do you think he just was too stubborn about selling off assets? I know I mentioned to you Neuberger earlier.
I was very fortunate to spend 11 years at Lehman Brothers. I started my career with Lehman Brothers in a management training program there. I rose to the rank of senior vice president. I was fortunate to be the COO of Lehman Brothers Bank and the CAO in their high net worth products division. Great company, very talented individuals. Very unfortunate that ultimately they had to declare bankruptcy during the great financial demise in October of 2008. Dick Fuld was a great leader, very competitive, always looking out for his employees and his shareholders. And certainly that factored into what ultimately unfolded there, no pun intended. But again, very disappointed to see what happened to Lehman Brothers. I left in '04, well before all of that
So
started.
do you blame Hank Paulson more at the end of the day?
I'm sorry?
Or do you blame Hank Paulson, the secretary?
You have to remember that Paulson was, CEO of Goldman Sachs at the same time that Dick Fuld was the CEO of Lehman Brothers, and they were competitors at that point in time. He would have assumed at that level, given the potential ramifications to the country, that any personal vendettas or competitive nature would have been set aside there. But
They did have their issues from the '98 LTCM bailout.
Yeah.
Where many said, Paulson held a grudge that Fuld did not participate in the bailout, that Paulson was one of their prime brokers. So obviously he was very much facilitating the bailout.
And I think there were a couple movies about that as well.
Yeah, definitely. So how are you feeling about the market? Good, great, okay?
I'm feeling good about the market. The way I look at it right now, we're at the beginning stages of an economic expansion. If you look at the 4 cycles of any economic cycle, generally the expansionary period lasts the longest. We came out of the initial recovery from the COVID-19 pandemic. Recoveries generally, last typically 6 to 9 months. The expansions are multiple years, and then we go into a contraction and a brief recessionary period. We're in a good position right now, but it's how do you identify the growth opportunities given how excessive valuations are right now? And I think you need to consider some of the rotation trades that are taking place thus far in 21. Growth to value, large cap to small cap, and even US to international, not just emerging markets, which actually did outperform US markets last year.
So Kevin, if I had to lock up all of your money in either the SPY or the IWM between now and December 31st, where would you let me lock it up?
All of my money.
It's SPY or IWM. You got to pick one of the two. It's one of those annoying devil's choices.
I would go SPY. I'd overweight SPY, but I'd still have some in IWM.
No. I mean, if things continue to roll, the IWM obviously will end up being a huge performer. Most likely, bad things can happen. 2011, you don't want to own IWM, of course, during the unprecedented debt downgrade. Yep. But we're in a really expansionary time, though. I mean, the data that RAI has been seeing, we are seeing gigantic green signs in just across the economy. People are buying and selling, and they're saving. It's really, there's just so much money in the economy. RAI is a little like, whoa, what's going on? I mean, we did just print.
To be true.
We just print a lot of money, but people are going out and they're spending. And what's the term? It's like compulsory spending, where people who felt locked up, they want to go out and they want to have a good time. So
yeah, and I think that's creating certain short-term inflationary pressures in the system. And I do believe that the initial spike we saw in April is transitory, to borrow from the language used by the Federal Reserve. And once supply of demands in goods and services picks up and catches up to demand, that's kind of now been pulled forward, Alex, due to the rapid rate of vaccinations and the reopenings of the economies across our country. Once that catches up, inflation should be a little bit more muted. But it's going to be here for years to come, because the Fed is allowing this economy to be reflated and to stay above their 2% target for some period of time, until unemployment gets closer to that 3.5% level where we were in March of 2020.
I completely agree with you. Everything you said. What worries me, though, Kevin, is how high could the S&P valuations go? Could you see a 30 or a 40 handle in the next 2 to 3 years? I assume we will.
Yeah. I mean, if you look at PE right now, and I'm not a big proponent of current PE, I much prefer forward PE versus price book. But right now, as of Monday, it was roughly 29. 2 weeks ago, Alex, it was 31.5. The 10-year average PE of the S&P 500 is roughly 18.5. That's excessive from an historical average standpoint. Now, that doesn't mean US large cap stocks can't or won't move higher, but I just see there's more attractive growth opportunities beyond US large cap stocks. You could have thrown a dart on the dartboard of a US large cap stock last year, and had a good, decent return. That's not going to be the case
True.
for the next 2 to 3 years. You got to look at small cap, you got to look at some different sectors, and you have to start allocating overseas where valuations are even more attractive right now.
It's true. International stocks are much cheaper than domestic, and there's much more growth in the IWM than there is in the SPY right now.
Yes.
Yeah, no, definitely. So what are you most afraid of? What would you want to keep your money away from right now?
We're not going to talk about cryptocurrencies.
So that's the answer. I love it. I don't have a dollar in crypto. I'm not comfortable with crypto. I've known the Winklevi for 30 years. They're great, really, really bright individuals, but it's not for me. I'm an old-fashioned guy. I like to know what I own.
Yeah, you're speaking to the choir here. I do appreciate, and I'm looking for blockchain-oriented opportunities to invest in. We continue to look for companies that derive a majority of their revenue from developing or using.
Check out my friend. My friend is the CEO of Arbol. It's a weather blockchain. So, people can see, what are the odds and what are the chances. And it's, a kind of very altruistic insurance for, growers and planters. I don't know how the market is and I don't know if they'll succeed, but it's an interesting application of blockchain to provide a more, altruistic insurance. So, and they were on the show and it was interesting to learn about them. There's limited applications for blockchain I've seen.
As it stands right now, but the
Yes,
potential applications are wide, looking at healthcare, looking at financial services, looking at insurance. I mean, it's a revolutionary technology. It's just hard to harness right now and fully appreciate it because it always falls back into the cryptocurrency conversation because it's built on blockchain. It could be used for far more than just digital currencies.
Lastly, do you have a view on energy?
Yeah, I mean, if I look at alternative sources of energy, which is where this administration appears to be pointing us to, and we go back to the original topic of this interview today, that being ESG, certainly there is more and more demand for alternative sources of energy and abandoning traditional forms of energy. But that's not going to happen overnight. And with the increased demand for energy as the economies reopen and the limited supply that we have right now, I'd expect more upward appreciation for certain energy-oriented commodities. Longer term, though, I think you look at that alternative or regenerative phase.
Actually, I agree with you, and so does Mark Fisher, the well-regarded oil trader. So this was a fantastic conversation. Really appreciate your brilliant insight, and I have to say I agreed with really everything you said. So whether right or wrong, tell you
we'll be right or wrong together, Alex.
Insight for our viewers. Yes, thank you so much. I really appreciate
Thanks for having me on.
Stay safe.
You stay well.